Welcome to PhatBear Pod, your Thursday dose of blockchain banter, where we slice through the noise to get the alpha. I'm your host, PB. All right, let's kick things off with Bitcoin chilling around 93.5K. Total market cap unchanged since yesterday at 2.91 trillion. The 24-hour trading volume, a measly $97.2 billion, down 30% from yesterday. Bitcoin dominance is clocking in at a beefy 63.5%. Looks like the market still thinks BTC is the only thing with a damn in crypto. The fear and greed index is stuck at 53, neutral as Switzerland. For alt's performance, the winners are Trump, Polygon, Ardor, and Artificial Superintelligence Alliance. The losers are Turbo, DeepBook, Babylon, and Colonel Dow. Let's dissect the world's financial fever dream, U.S. home sales. U.S. existing home sales tanked more than expected in March, dropping 5.9% to a seasonally adjusted annual rate of 4.02 million units. Economists were betting on a softer fall to 4.13 million, but nah, the market said, hold my beer. Why the bloodbath? Blame those 7% mortgage rates that are strangling buyers. When borrowing costs make you sell your kidney to afford a 2-bedroom fixer-upper, people just don't buy houses. Simple as that. Year on year, sales are down 2.4%, and the vibe is grim. Contracts signed back when mortgage rates were teasing a dip in January and February are closing now. But with rates creeping back up to a 2-month high, don't expect a housing moon anytime soon. Further weakness is likely because tariffs are sapping demand faster than a whale dumping on a low-liquidity exchange. And let's not kid ourselves. When a housing market sneezes, the economy catches a cold, which means our crypto bags might be in for a chilly ride too. Time to wade through the blockchain muck to find our crypto stories of the day. First up, we got a juicy story straight from the courtrooms, where NBA legend Shaquille O'Neal has finally settled his FTX lawsuit. According to the block, Shaq's been dodging legal papers like he's back on the court swatting away free throws. This class action lawsuit, filed by investors who got burned when FTX imploded in 2022, accused Shaq of shilling unregistered securities for the exchange. Shaq was out here in FTX ads, calling himself all in and getting paid a cool $750,000 to hype the platform, only to later claim he was just a paid spokesperson who didn't know jack about crypto. Classic. The settlement details? Locked tighter than a multi-sig wallet. Confidential for now, but we'll know more when the court approves it. This comes hot on the heels of Shaq coughing up $11 million to settle another lawsuit over his Astros NFT project, which tanked harder than a Solana-based governance token during a bear market. The man's been playing legal whack-a-mole, getting served papers at NBA games, and even at the former FTX arena in Miami. Poetic justice, right? Lawyers had to chase this 7-foot giant for months, with one process server claiming Shaq was running from the case like it was a bad endorsement deal. Next story. A hacker sneaks into ZKsync's airdrop contract like it's an all-you-can-eat buffet, swiping $5.7 million in ZK tokens and ETH by exploiting a compromised admin key. This went down on April 15th, when the attacker minted 111 million unclaimed ZK tokens, inflating the token supply by 0.45%. and sending the token's price into a 20% nosedive faster than a rug pull meme coin. ZKsync's team was quick to say, chill, user funds are safe, but let's be real, when a protocol gets hacked, the only thing safe is the community's panic on X. Instead of going full FBI wanted list, ZKsync Security Council played it cool, dropping an on-chain message like a crypto ransom note. Hey, hacker, return 90% of the loot within 72 hours, and you can keep 10% as a bounty. No cops, we promise. And guess what? On April 23rd, the hacker sent back $5.7 million in 3 tidy transfers, keeping a cool $570,000 as their ethical hacker tip. The funds are now chilling with the ZKsync Security Council, who will decide what's next via governance, which we all know means endless debates, and maybe a DAO vote that 12 people actually participate in. Last crypto story. Alex Mashinsky, the guy who sold Celsius as the unbank yourself crypto utopia, is back in the headlines. According to CoinSpeaker, Mashinsky's been fighting to delay his sentencing after pleading guilty to fraud charges. But the U.S. court ain't playing. Originally slated for April 8th, his sentencing got pushed to May 8th after his legal team begged for an extra month to polish their sob story. They claim they need time to craft a sentencing submission that paints Mashinsky as less of a crypto con man and more of a misunderstood genius. Good luck with that. Last I checked, I didn't know it was illegal doesn't fly when you fleece investors for billions. Mashinsky copped to 2 counts, commodities fraud and securities fraud, admitting he misled Celsius customers about the platform's safety and profitability while secretly pumping and dumping the Cell token for a cool $42 million in personal profits. This guy was out here hyping Celsius as a safer than a bank haven, all while using customer deposits to prop up Cell price like a shady market maker on a low liquidity DEX. When Celsius froze withdrawals in June 2022, leaving $4.7 billion in user funds locked, Mashinsky had already yanked $8 million of his own crypto off the platform. Talk about a captain abandoning ship before it even hits the iceberg. Up next, our DeFi news today got more red flags than a rug pull Telegram group. President Donald Trump, self-proclaimed crypto president, decided to juice up his Trump meme coin by dangling the ultimate carrot, a private gala dinner with him for the top 220 holders. And the top 25 get a VIP reception and a special tour at his Trump National Golf Club in D.C. on May 22nd. The announcement hit the Trump website like a hype bomb, calling it the most exclusive invitation in the world, and sent the token soaring over 70%, hitting around $14.70 before settling. That's a nice pump for a coin that's down 80% from its January peak of $75, when it briefly had a $15 billion market cap. To snag a seat, you got to hold a ton of Trump from April 23rd to May 12th, with a leaderboard tracking your average holdings. As of now, the 220th spot needs about 26,633 tokens, roughly $350,000, and the top 25 are balling with millions. The top dog, some wallet name Case, is flexing 400k tokens. But here's the kicker. 80% of the token supply is held by Trump-affiliated entities like CIC Digital and Fight LLC, meaning the Trump family's got a stranglehold on this coin's fate. And yeah, there's a fine print. Trump might not even show up, but you'll get a lousy NFT instead. Next story. Initia, the self-proclaimed multi-chain Garden of Eden, officially flipped the switch on its mainnet today, after months of testnet hype and a $350 million valuation. Built on the Cosmos SDK, Initia is pitching itself as a Layer 1 and Layer 2 hybrid, with a fancy interwoven roll-up system called Initia that's supposed to make cross-chain DeFi as smooth as a whale's market order. Think of it as a blockchain smoothie blender, tossing EVM, MoveVM, and WASM VM to let devs whip up app-specific chains without the usual multi-chain migraines. Initia's got big promises, unified liquidity, seamless bridging, and a developer-friendly stack that's supposed to rival Celestia or Movement. But let's be real. The Cosmos ecosystem is littered with projects that sounded great on paper, but ended up as ghost chains. With $24 million raised from heavyweights like Delphi Ventures and Hack VC, Initia's got the cash to burn, but the real test is adoption. Over a dozen projects are supposedly building on their stack, but if those Initias don't attract actual users, it's just another shiny protocol collecting dust. Last DeFi story. Dolomite, the DeFi lending and trading protocol that's been grinding on Arbitrum and Barricade like a crypto workhorse, officially dropped its Dolo token today in a token generation event that's got traders and airdrop hunters salivating. Dolo went live at 9 a.m. Eastern Standard Time on major exchanges like Bybit, KuCoin, Bitget, Kraken, plus DEX like Uniswap, Ethereum, and Kodiak Phi Barachain. That's a launch lineup, so stacked it's practically screaming we mean business. The token's trading with a total supply of 1 billion, of which about 361 millions are circulating. Dolomite's not your average DeFi protocol. It's a money market and DEX combo that lets you lend, borrow, and trade over 1,000 assets without giving up your staking or voting rights, thanks to its dynamic collateral system. Think of it as a Swiss Army knife for your crypto bags. Margin trading, over collateralized loans, and spot trading, all wrapped in a capital-efficient package. They racked up $928 million in trading volume and hit a $1 billion TVL peak, making them a top 10 lending protocol on Berachain, Arbitrum, and Mantle. The Dolo token's the backbone, handling governance, liquidity incentives, and risk hedging, while VDolo gives you voting power and protocol revenue shares if you lock it up for up to 2 years. The airdrop of the day is Linera. It's a Layer 1 blockchain that's hyping itself as a hyper-connected, real-time savior of Web3 apps, built for multi-chain chaos with a proof-of-execution model that sounds like it was dreamed up in a Silicon Valley coffee shop. First up, Linera is running a big campaign on Galax. The tasks are a mix of daily, weekly, and monthly chores, ranging from brain-dead simple to why am I doing this? Linera's Discord is another point farming hub. Join their server, chase XP by being active in channels, and stack those ranks. Linera's got a testnet coming soon, and projects like this love rewarding early testers. Check platforms like Interact, where Linera's already dropped NFTs for tasks. Those could be golden tickets for bonus points or airdrop eligibility. That's my pod of alpha this Thursday. I will be back to roast more crypto nonsense tomorrow. This is PB. Catch you next time.